All right, you guys, so let us begin. We are continuing with this question. You all actually had this question for homework where I had indicated last week, you all had to prepare the income statement, the balance sheet for the simple sole trader. All right. Name of the business is J. Jordan. So you're preparing a trading and profit and loss account, also called the income statement, and the balance sheet as at this date. Right? I hope you all were able to attempt it. We are looking at that today. And then we're moving on to our new topic, because it's the last class until September reaches, where we'll be able to actually focus now in depth past paper questions. You'll get additional resources to practice more PoA questions. All right. So right now we are just dealing with questions, no past papers as yet. So from September, you will get those in-depth questions. All right. So this is a simple one that we have on the screen. J. Jordan. We said it's from the textbook, Frankwood, 26.11x in the 5th edition and 28.11x in the 6th edition. So let's start looking at it. So again, we have the question here, 26.11x, 28.11x. Either book you all are using, this is the question we are looking at. So first things first, whenever we are starting off with any question, is that we put the name of the business. You want to work out with at least 1 mark. You have the name of the business in your 3 lines here. J. Jordan, trading and profit and loss account. And what year we are preparing it for? December 31st, 2008. Depending on the edition of the textbook you all are using, the year might be slightly different, but the question, the numbers, everything should be the same. So starting off with our sales figure. So at this time, I want to hear some answers from you guys. I'm taking note of your participation. Yes, so I'll have an idea that you all are understanding this trading and profit and loss account and balance sheet, entire financial statements of a sole trader, as well as the adjustments to these financial statements. All right, so let me get some answers from you guys. Right, so we have our sales, less return inwards will give us our net sales of 118,936. So you all got that. Very good. Now we are lessing our cost of goods sold, which consists of opening stock. So how much is our opening stock? How much is our opening stock? So we said, from what I'm seeing here in the chat, we said that the opening stock will be found inside the question itself, whether it be in the trial balance, in the list of items that is presented. In this case, let's just go back. The opening stock, we see it here highlighted at 30,816. So we should account for 30,816. And any stock outside the question itself will be our closing stock. So as soon as we have finished with this, we have to add purchases. And we say purchases will be in our first column, which is in the question, 84,290. What is our carriage inwards? Good. 309. And then we will add these two amounts to get our gross purchases of 84,599. Very good. So you all got some marks there already. So being mindful that, I have my format, when in the exam, when you all are doing this, you all have one out of two options. You account for each item at a time, or if you all want, you all can write down the entire format and then plug in the figures. But I think that that's just going to most likely waste time, because next thing you know, they didn't have return inwards and you still had to write it in. Didn't have any opening stock, but you still wrote in opening stock. As you see an item to account for is when you could then present it in the format. That's what I would suggest. But if you have a different way and you feel that you will be able to make it within the time frame for the exam, then by all means, you all can do so. So we have our gross purchases figure. Right, so I hope you all are being mindful of this format, because right after this, we are looking at partnerships. So I'm just putting that out for those who are asking here. What's our next topic? Yes, partnerships, and we will be seeing the same type of format in our partnership accounts. Slightly a bit different, but the gist is still there. Right after we get our gross purchases, we know we have to less our return outwards. We less return outwards, we will get net purchases of 83,789. Were you all able to get that figure? Yes, very good. So now, this is so simple now. When we start the past papers, you all will see the same concept, but a little bit more in depth, especially when it comes down to the adjustments, which surprisingly in this question, we do have adjustments. So you all will see what in depth, what more we'll have to do to account for a sole trader business. So we have our opening stock, we have our net purchases. How do we get our cost of goods available for sale? Adriana or Carissa, what is our cost of goods available for sale? How do we get that figure? Good. So Juliana is saying we're going to take our opening stock and add our net purchases figure, which is correct. Right? Good, you guys. And then we're letting our closing stock, and we said the closing stock will be found outside of the question, sometimes in the additional information. Closing stock is outside the question or in the additional information. In this case, our closing stock is 36,420. And we'll get our cost of goods sold by finding the difference between the 114,605 and the 36,420. So cost of goods sold will be the difference. Very good. For those who are giving me the answers before I even present them. Very good. So now to get our gross profit, how do we get gross profit, you guys? We take our net sales, continue, and we minus our cost of goods sold. Very good. So the gross profit in this case will be equal to 40,000 751. And we know there's a profit. We know there's a gross profit because our net sales is greater than our cost of goods too. If it was the opposite, by where net sales was less than the cost of goods sold, then we will get a gross loss. But in this case, we get a gross profit. And before we move on to our expenditure side, whenever we finish our revenue, think of what other revenue the business can incur. What other revenue can the business generate or have generated? Well, it's here in the format. We are going to add other income. Were there any other incomes in this question? Were there any discount received? Yes. And how much is the discount received? Sorry. 506, good. Were there any decreases in the provision for bad debts? We say that will add to our income because our debtors is paying back monies that they were initially owing. So the fact that they are decreasing the amount that they were owing to us, it will add to our income. In this case, what did they exactly say? Let's go back to what they said here. Let me just move this aside. Provision for doubtful debts to be reduced to $580. All right. So in the question, provision for bad debts, let's look for it, is 658. And then it says it's going to be reduced to 580. So you all, this is where you all need to bring out, your scientific calculators, not your phones. Again, accustomed to using the calculator here now, which I know you all have been doing. So what do we do here? Read the sentence again. Provision for doubtful debts to be reduced to 580. The question now is, yes, it was reduced to 580, so it's no longer 658. It went on to 580. So we know there was a decrease. How much did it decrease by? That is what will answer the question. How much did it decrease by? And I'm seeing your answers being $78. You are correct. So you all could put in brackets whenever you all are studying these types of questions again. And when we get to the past papers, you all will see that the original provision for bad debts was 658 in the trial balance. But the additional information it said is 568 or 558, whatever the amount they said here. How much was it? 580. So it moved from 658 to 580. It decreased. We are getting this revenue. How much? By how much? $78. That's how you account for it. And now we also had another item, another income that's going to be added to our gross profit, rent receivables. Did they say anything about rent receivables over here? Part of the premises to be lent to a tenant who owed $250. You're seeing that? So how would you all make sense? You're asking yourself, okay, so J. Jordan lent their premises to a tenant, $250. You're asking yourself the question, we are lending it out. Who is owing $250? So this tenant is owing $250. So the tenant is owing that. We know that that will be added to our rent receivables. We should be getting this after the period is completed, when we close off the books and we account for all our adjustments. We should be getting this $250. So you rent out a premise, we rented out the premises to a tenant, we gave them the premises, and we expecting to get this $250 revenue, rent receivable. Are you all okay with this so far? Right. So what is our total revenue? Or I should say, what is our total gross profit? So we had a gross profit of $40,751, discount received of $506. There was a decrease in provision for bad debts, which is $78. Rent received $250. What is our total income? So when you total everything, you should get 41,585. So I'm seeing some answers here in the chat. Not sure how you all are getting those amounts. All right. Remember, we are adding. Let me just show you all again. I'm just going to highlight it in yellow. We're adding the 4751 and all the other incomes that we would have received or going to receive. And that's how we get the 41,585. If you all are using your phones, I would suggest you don't, because we are doing PoA, yes, it's accounts. Get into the habit of using your calculator. I know sometimes you want to do mental maths, you know, those were like the primary school days, that session in school, you do your mental maths, dictation, those kind of things. In PoA, if you feel confident enough to add these amounts without using a calculator and you're going to get it correct, okay. But for like people like me who need a calculator to calculate these kind of amounts, because I'm not sure if it's be correct or not, you get a mark for every correct answer. I want to ensure that my answer is correct. All right, so I hope you all are seeing the calculation. So we are adding. Now we are going to less expenses. So the first expense we have here is discount allowed. So how do we know if we have to adjust any figures for discount allowed, or what is the actual figure? Just going back to the question, discount allowed 410, there was nothing else pertaining to discount allowed in the additional information. So discount allowed should be 410. The next expense, let's see, between carriage inwards and carriage outwards. Which of these two is the expense again? Between carriage inwards and carriage outwards? Carriage outwards, good. That will be accounted next. $218. The next expense is not return inwards, not return outwards, not sales, not purchases, not stock. We have motor expenses, $49.17. Anything else pertaining to motor expenses in additional information? You're looking through anything with motor expenses? Yes. we have something here, expenses owing, motor expenses, 33. And we said owing, also called accruals. Whenever we are preparing the statements, we have to add all accruals, all expenses owing. Just always remember that. Accrued expenses, you need to add it to the expense that is in the trial balance. So motor expense is 49.17 in the trial balance. The amount owing is 33. So when we are crossing the answer, when we have to find out the answer, and then you have to give your workings. In exams, you have to show all workings. Because next thing you know, you get it wrong, but you show your workings, chances are you are going, actually, for sure, you will be getting your marks for at least your workings. All right, so motor expenses, 49.17, add accruals, which is what was owing, which is 33, which should give us a total of 49.50. All right, so very good, Alima. I'm seeing your answer as well. So 49.50 is our total motor expenses for the period. What about repairs to premises? Let's go back to the question. So we are accounting for motor expenses, repair to premises, 1383. Anything else for repair to premises affecting this amount? No. So we can just put it in here safely. Just give me a second. Repairs to premises, 1383. Wages. Wages is our next item. Anything affecting wages? Was wages accrued? Anything like that? $16,184, nothing affecting wages. In addition information. I hope you all are seeing how I am doing this question. As soon as I see an expense, I don't just account for it like that. I see the expense, I go to the additional information to see if anything at all affects that transaction. So we just have nothing else affecting it, so we can safely put this amount. 16,184. What is our next expense? So we did wages, sundry expenses, 807. Sorry, 807. But in point B, we said expenses owing sundry expenses, 62. So it's another accrual. So we have to add our sundry expenses to our expense to get the total expenses incurred or owing for the period. $869. All right, so we're moving down. You're doing good so far. Hope you'll be able to keep up this pace when we, well, obviously a faster pace when we reach September. You know, we just taking this as the third week of class. You all actually did this question, we correcting it. So when we start the past papers, no excuses, you should be getting everything correct. Rates and insurance. Is it our next expense after sundry? Yes. Anything affected rates and insurance? No or yes? Look at it carefully. We did this, we finished B. We see in prepayments rates 166. So what do we do? What do we do with what this 166 at a prepayment? Yes, we minus the prepayments from the rates and insurance figure. Very good. So our rates and insurance, yes, is 28.96, and we have to less our prepayments of 166 to give us our net value of 27.30. Okay. Let's look at the next expense. Premises at cost, motor vehicle at cost, depreciation. Sorry, it's provision for depreciation, motor vans. So you don't depreciate land. Land only appreciates. So premises at cost, this says 40,000. They said motor vehicle at cost, but then they said provision for depreciation, motors, as at December 31st, 2007. And what did they say in note E in the additional information? Look at letter E. Depreciation for motors to be 2,100 for the year. So we have it very easy. They actually tell us what the depreciation expense is. You do not record the provision for depreciation in the profit and loss account. I'm repeating that. You are not to record the provision for depreciation in the profit and loss account. You will record it in your balance sheet. The only expense that will be affecting depreciation for any asset is the depreciation expense, which will only be in the profit and loss account. So provision for depreciation, it will be in your balance sheet. Any expenses for depreciation will be in your profit and loss account. All right. So they said it here in point E, depreciation for motors to be $2,100 for the year. So no calculations is required. And all we do is just put $2,100 for depreciation of motor vans. I'm going to stop there for a while and take in any concerns, any questions, any confusion. You all can message me in the chat. I'll wait a little 2 minutes to hear if you all have any questions. All right. So the next expense that we are seeing here in the profit and loss account is our bad debts. And how much is our bad debts? Remember, debtors and creditors are not expenses. Cash at bank, not an expense. Cash in hand, not an expense. Drawings, no. Bad debts, 13.14. So bad debts is the expense. Provision for the bad debts, you will not put it in the profit and loss account. You'll put it in your balance sheet. So any provisions, any provision for depreciation, any provision for bad debts, that will only be seen in your balance sheet. You only account for your expenses in the profit and loss account. So we are through with depreciation expense. We are through with the bad debts expense. Now, my question is, have we accounted for all our expenses? So if you all were doing what I told you all to do last 2 weeks, which is to tick off every item that you would have accounted for. If you're missing anything, which you all know not supposed to be, which supposed to be in the profit and loss account, and you didn't include it, now is the time to include it. So are you all seeing anything that's relating to any expense, any stock? Any expenses owing, we accounted for this already. Prepayments, we accounted for that. Provision for doubtful debts, we accounted for that as well. Depreciation for motors, yes, we did account for it. Part of the premises to be lent to tenants, we accounted for that. Loan interest owing to P. Holland, $4,000. Loan interest owing. Money owing. It is an interest, especially owing to P. Holland. So even though you would have accounted for all your expenses here, in your additional information, there will be other expenses that you need to account for and to look out for. So this needs to be accounted. So loan interest, 4,000. So what is our total expenses? Because we accounted for everything now. We have completed all our expenses. How much you all get? Okay, so I'm seeing some answers here. Use your calculator, you guys. Sure shouldn't be giving me any wrong answers here. Use your calculators. You're totaling every item in D. In the D column D from the Excel sheet. 410 going straight down to 4,000. Do I need to have a tutorial session on how? Okay, you'll take your time, take your time. I'll pause it for a while. Okay, you got the answer. Total expenses is 34,158. Very good. So that is the answer for your total expenses. How do you know if you get a net profit or a net loss? Well, you now find the difference between our total profits and our total expenses. If your profits is more than your expenses, you know you get a profit. If your profits is less than your expenses, right? Meaning our expenses is greater than our profits, we get a loss. So what is our loss? Find the difference between the 41,585 and the 34,158. 74,27 will be our net profits. Are you all seeing that? And that is just the first half, which should give you about 15 marks in the exam. For at least 15 marks, it can sometimes go for more. So did you all complete the balance sheet? Were you all able to complete the balance sheet? So I'll take this time to hear some answers on the completion of this balance sheet. Were you all able to balance it? Let's see. Let's start looking at the answers here. Premises is our, so we are preparing the balance sheet for J. Jordan in the vertical format. You all should remember the horizontal format as well. Just in the event that they bring it and you have to analyze. But in exams, it usually asks for the vertical format of your income statement and your balance sheet. So if you think you may have forgotten how to do the horizontal style of the trading of profit and loss and the balance sheet, please let me know now, and we will see how best we can tackle that the first class or the second class of September. I'll give you all enough time to recap the horizontal style of the trading profit and loss and the balance sheet. Don't always assume that because teachers say, oh, that don't come, or, you know, in the syllabus, or wherever you may hear it, that the horizontal style is not examinable. That's a lie. If you all go to your past papers, you all will see it for yourself. Sometimes in your multiple choice, you will see the horizontal style where you have to interpret or fill in the blanks. So I'm giving you all now until, the ending of August to go through back your Form 4 notes and get the horizontal style. If you are unable to locate it or you still have problems with it, please draw it to my attention as soon as possible. Even if I may forget, please let me know. So we are looking at the vertical style here tonight. We're continuing with J. Jordan balance sheet. So you're doing the order of permanence. So we're starting off with premises. Premises had a cost of $40,000 in the trial balance. Let's look at it here quickly. Premises at cost $40,000. What is now our accumulated depreciation? Within accumulated depreciation for premises, over there, did they say anything? Depreciation is only for motors, nothing for anything provision for depreciation, nothing else for premises. So we should know that this should be 0. So what is our amount for our net book value? Our net book value will be $40,000. It will be a 40,000 minus your accumulated depreciation, which is 0, to give us $40,000. Motor vehicle at cost is $11,160. We see that over here. Motor vehicle at cost. But then they went on to say that depreciation for motor vehicles is $38.60. And from the slides of last week, which I hope you all were able to review, we said that when we are accounting for any provision for depreciation, we have to take into consideration what would have been placed in our profit and loss account and what is in our additional information. So in our profit and loss account for the motor vehicles, it was $2,100. We accounted for $2,100 in the profit and loss account. We just did that. But we don't just put that as the answer because we see provision for depreciation or we just see depreciation. We have something else here, provision for depreciation. So how do you know what will be your accumulated depreciation? Accounts requires a lot of common sense. If provision for depreciation of $38.60 is in our trial balance, and there's a depreciation for motor vehicles of $2,100 outside the trial balance, accumulated depreciation, which means total depreciation, will be our $2,100 plus our $38.60. Very simple. So it will be your $2,100 plus your $38.60, which will be $59.60. Were you all able to get that answer? Yes? No? Not really, miss? Yes? Okay. And if you have any questions, you will let me know, right? So we got the accumulated depreciation by taking the total, what we have in our depreciation, as well as what we had in our provision for depreciation. That gave us our accumulated, our total depreciation for the period. So how do we get our net book value? Very simple. We take our cost price and we minus the accumulated depreciation, which will give us $5,200. So at this stage, all we have to do now is just add everything. So we add 40,000 and 11,160, we get 51,160. We are adding, let me see if I can draw some lines here. Right? 5960 plus 0, 5960. 40,000 plus the 5,200 will give us a 45,200. This is our total of fixed assets, which I saw you all had in the chat. Very good for those who got that figure. Very simple. We are moving on. The next part of the format for our balance sheet is to account for current assets. And the first item that we are seeing here is closing stock. Where do we find our closing stock? It will not be in the question, but will be outside of the question in your additional information. So let's look at it. Our stock, so you see we had a stock here, and we have a stock here. Stock in the question is our opening stock. Stock outside the question is our closing stock. This stock is our closing, 36,420. And we are accounting for the closing stock here of 36,420. You all get through with that? You're all seeing that, right? Very simple. Now we are going to account for debtors, also called accounts receivables. So how much is it? We're going here. We're going back to the trial balance. Debtors and creditors. But you know we're dealing with debtors. Debtors have the debit balance. Creditors have the credit balance. So this is our debtors figure. 31,640. But we always need to know that there's something that will always affect our debtors, which is bad debts or provision for bad debts. In this question, they had something about the provision for bad debts. They said it should be reduced to 580. So we had accounts receivables of 31,640, and we are decreasing it by, well, to 580. So that means our total debtors figure should read 31,060. So it's no longer 31,640. That was initially our debtors figure. But because we had a provision for bad debt, and we said a provision for bad debt is just in case the debtor cannot pay off their debt, the business will just take out some money from their profits, put it aside just in case, you know, these debtors cannot pay off their debt. In this case, we made a provision. We made provision for bad debts. Debtors were, in fact, able to come and pay off their debt because we had reduced it in the gross profit. There was a decrease. That means debtors came to pay off their debt. How much did it increase by? It went down to 580. So our final accounts receivable figure is 31,060. I hope I didn't confuse you guys. If I did, you all let me know. I know when it comes down to this part, it only takes a lot of practice for you all to actually absorb and understand. If this is first time information to you all, it will confuse. It will be confusing, but you all just have to keep practicing these types of questions, and you all will be able to close your eyes and do the exam and still pass it, right? So I'm going to just go over the whole calculations for the accounts receivables. So accounts receivables in the trial balance was 31,640. But we cannot say that is our final accounts receivable figure. We have something affecting accounts receivables, which is provision for bad debts. Provision for bad debts only came about because the business would have probably experienced so many bad debts in the past. They said, hey, you know what? Let me just try to put something aside in case Jim come with the same sad story as usual, but this time he can't pay it back. He just can't. So me being Jay Jordan, I say, you know what? I'm gonna take out money from some money from my profits or somewhere in the business, take all that money just in case Jim cannot pay back his debts. So I made a provision for bad debt. That is how it comes about. You're just putting aside money in the event that you have a bad debt. So I hope you all understand up to that so far. In this question, going back to the question here, we see that provision for doubtful debts to be reduced. So I should be happy being J. Jordan because I could finally reduce my provision for bad debts. I put aside, let's say, $1,000 or sorry, 658. 658 I originally had. But it looking like, who said Jim? Jim came and he paid off his account. He's able to pay off. So we could reduce what we had put aside and actually put it back into the business. And it went down from 658 to 580, which gave a difference of $70, I think, when we worked it out. Since we had reduced it, it would be a profit to the business because we are getting back money from Jim, who originally was owing the business. But now, to account for it in the balance sheet, because it went down to 580, all we do is just find the difference between what the debtor was originally owing and how much we can take out from that debtor that actually paid. And we find the difference of $31,060. You all seeing that? Kelly, you had asked me to repeat, so I just want to make sure that you understand. You can just message me in the chat. I'm seeing Carissa, yes, you're okay. I hope the rest of you all are also okay as well. Okay. We are continuing with the balance sheet, so let us just finish it off. From here on, it should be a little bit more simple. I think it's when it comes to provision for bad debts, provision for depreciation. I know students tend to get a little confused with those two terms, but trust me, it is very simple. First time you're being introduced to it, it will be confusing, but after this class, please recap, review, write your additional notes, store the recording somewhere safe so you could always go back to it. The next current asset is prepaid expenses. And we say prepaid expenses meant that I would have paid for something in advance. And because I'm paying for something in advance, it is not relating to the current period. I am not going to pay for my, let's say, my gym fees for January, February, March. I'm paying every month $500 every month. But when I reach April, I want to pay for May, June, July, August, September. When those accountants at the gym have to prepare their statements, they cannot look at what I paid in advance because it is not a true representation of what they're supposed to incur in that gym. So that's why we have to account for it. When we did it in the profit and loss side, we had less it. So let me see if I can find it here. We had less the prepayments of 166, and we would account for it here in the balance sheet of 166 under current assets. It's a current asset because we paid in advance, we have this inside, we don't have to worry about other periods, but we have to account for it as a current asset. So prepaid expenses is a current asset. Income owing. So yes, you see the word owing, but this is a tenant who would have gotten the premises. So in other words, we basically going to be getting this $250, which is what the note says across here. Part of the premises to be lent to a tenant who owed $250. So we lent him the premises. So in other words, we should be getting this $250 very soon. There was also a cash at bank and also a cash in hand from the trial balance to get our total of current assets, $72,900. So please note the format of our current assets section. When we are looking at a format, you should know income owing, current assets, prepaid expenses, current assets. If I had accrued expenses, owing, expenses that are owing, we know it's a current liability. So this is a good way for you all to really pay attention to what I have here as a format. So we get our total current assets. We are now looking at current liabilities. In the question, it had it as 24,320, just verifying. Accounts payable, 24,320. Accounts payable is a fancy word for creditors, 24,320. Accrued expenses, we had 62 and 32. Sundry expenses was owing, 62. Motor expenses was owing, 33. So that's our total accrued expenses. We had the interest on loan, which is another current liability. Loan interest owing to P. Holland. It's owing, current liability. So a total of current liabilities should be 28,450. Just some thumbs up for those who are okay so far up to this point. All right. Excellent. So all I'm doing is just plugging in my figures here now. The next part is where I'm just going to find the difference between current assets and current liabilities, which will give us our total, our working capital. Sorry. So yes, correct. Our working capital total to be 44,485. Very good, Ariel. Right? So working capital is 44,485. So what do we do from here to get our net assets? So we can bring this up a little bit here. To get our net assets figure, we have to find the total of our working capital and our fixed assets. Total. So we have to add it. Some students, they make the mistake of minusing, but you all are not to do that. I will point out all the possible mistakes and all mistakes that I would have heard over the years from students, you know, if they forgot to do this or they did not come for that. I'm giving you all what you'll need to look out for. When there's total of fixed assets and there's a working capital, we have to add it to get our net assets figure, as well as our balancing figure to know if we are correct. So I'm going to put this in green. This is the amount that we have to come back with. after we are through with the questions. We just have a few more again, just everything here highlighted to come back to this 89,685. Were you all able to get it before I give the answer? You were able to balance off? The balance sheet was able to be equal? Yes? Very good. So let's continue. Let me see if you all had this. So we're starting off with our working capital, sorry, our opening capital. Opening capital would have been seen over here, 50,994. We just plug it in. Our net profit, I'm pulling it from the question that we would have done before, 7427. That is our net profit. And then we're going to less our drawings of 8,736. How did I get that? Drawings 8736. It's going to be minus to get our closing capital of 49,685. So we have one figure so far kind of leading up to this balancing figure. So we have to continue, try and get this 89 here. Let's look at the current liabilities. Sorry, the long-term liabilities. Non-current liabilities, also called long-term. We had a loan from P. Holland, which is over here, loan of 40,000 from P. Holland. That will go in our long-term liabilities. So now we reach to the end, which is our capital employed figure. We have to add the 49,685 and our 40,000 to get our 89,685. This is when we know we are correct. And I saw that some of you all, majority of you guys had the answers. So that is very good. I'm really happy to hear this. So that means when we move on to partnership accounting and then manufacturing accounting and company accounts and all the limited liability companies, all we're doing is just exactly what we're doing here. We're aiming to balance off our accounts. All right. We have other topics to still complete, but by next week, please God, you all will get the announcements. You all will try your best to be in class. And I know it's going to be the final class for our summer. I find time really fly by too fast. Like anytime when I do accounts and I see economics, POB does kind of stall. I don't know why, but whenever I'm doing accounts with you all, I find time just fly by too fast. Next week is our final class for the summer. Imagine that. All right, but we're intending to continue for the new term, September. So next week, please God, there will be a few announcements being made. And I'm going to promise you guys a little assessment. I just want to have a little idea of your understanding. It can be a verbal assessment. It can also be a written assessment. I haven't decided how I'm going to assess you all as yet, but please come prepared. We are going to complete our summer program off with a bang. All right. We are going to, really understand what we have ahead to do. And that's what we'll be looking at come next week, please God, and for the new term. Okay. So if you all are okay with this so far, I hope you all have a great night. And I'll see you guys back for tomorrow's session, POB from 4s, 5s, adults, repeaters. Same time, 6 to 7:30, all right? Have a good night, everyone. Bye.